Bitcoin has the largest market cap, but what's driving all the innovation in the ecosystem right now is happening in the Ethereum ecosystem. So NFTs, Ethereum represents something like 95% of all the NFT value that's done to date. Decentralized finance, that's over 70% of that is on the Ethereum ecosystem. And then there's a whole concept of DAOs, decentralized autonomous organizations, is kind of a new way to organize companies. Those big drivers of growth and innovation are all happening in the Ethereum ecosystem. And that's why the story of 2022 is going to be a shift from cryptocurrencies to a digital technology ecosystem that transforms banking, finance, and ultimately all other industries.
Okay, I got to ask you, and anybody listening, Paul, would probably be wondering the same thing too. Based on what you said about this year, 2022, being the year for Ethereum, does that mean Ethereum prices have a lot more to run?
It's harder to say, and the reason for that is that Ethereum prices are driven in part by demand, and demand for gas, which is the sort of ether that's used in transaction processing, is based on how many transactions are done on the Ethereum mainnet. But one of the big stories of 2022 is how transactions are moving from the mainnet, which is relatively less efficient and somewhat more expensive, to this host of layer 2 networks. And I'll give you a really good example. On the mainnet, on the Ethereum itself, it costs us between $30 and $60 to do an NFT, for example. But over the holidays, we sent out 8,000 New Year's cards as NFTs. We did them on the Polygon Layer 2 network. It cost us less than $200. So transactions are moving onto Layer 2 networks, and that means that Ethereum could be wildly successful, but maybe demand to actually burn Ethereum for transaction processing might go down, which is why I don't think you can guarantee a one-to-one relationship between the ecosystem being wildly successful and somehow assuming that the price of Ether will automatically go way up.
All right, crypto fam, welcome back. We have a problem today. Money. We need to start making some money around here. Bitcoin has been moving sideways, if not downhill altogether. Tether's about to implode, the bottom may just drop out. The DeFi 2.0 gems, Time Wonderland and Own Finance, both down about 30% today. Protocol owned Ponzi-nomics liquidity maybe didn't work out as well as people hoped it would. And so I've come to your rescue today. You guys, I figured it out, how we're going to make some money. So today I'm going to give you 5 coin recommendations that may just 10x this year. And the way we're going to do this is by following the money. We follow where liquidity flows, and wherever there's massive amounts of money inflows into an ecosystem, that's going to pump up the prices of everything in there. Quick pause, this video is brought to you by myself, DeFiPro.dev. This is a new online course and community for decentralized finance. Decentralized finance is passive income, and I'm excited to share all of my learnings and experience with you in here. There'll be a link in the description below, DeFiPro.dev. Check it out. So in order to understand this, we're going to use a tool, DeFi Llama, a dashboard, in order to understand where the total volume liquidity is. Now, I've showed you this before, but Ethereum's market share has been dropping rapidly, currently at about 60% only, from just a year ago when it was almost at 100% market share. The Economist even notes that the race to dominate the DeFi ecosystem is on, and that Ethereum is losing market share. Who is it losing market share to? Terra, Binance Smart Chain, Avalanche, Solana, Phantom, Polygon, Chronos, and a bunch. But if we were actually to take a look at these, Phantom, that is our coin number 1. Phantom is particularly interesting, and I'll show you why. There's currently $7.6 billion of liquidity in Phantom ecosystem. So Phantom has been great for DeFi. It's currently where a lot of those degen high interest gains are, but you can see that the total value liquidity is just coming up very rapidly for Phantom network. And if you were to compare that to say Polygon actually has less liquidity than Phantom right now at just 5.4 billion compared to Phantom 7.5. But that doesn't match up when you look at coin market cap, right? Polygon's currently ranked 13. Meanwhile, Phantom, people don't even know what Phantom is. You mean the musical, Phantom of the Opera? It's a great one, by the way. Go watch it. And even Avalanche Network, AVAX, at $10.7 billion of liquidity. Phantom very well may surpass that very soon, maybe just within the next few days. So Phantom blockchain has really been this up and rising star, and there's been a lot of money inflows going into supporting this ecosystem. So that's our first coin, and 2022 may very well be the year of Phantom Network. We'll have to see. Coin number 2 that may be quite interesting is Glimmer. So Glimmer recently just launched from Moonbeam Network, supporting EVM machines, Ethereum virtual machine compatibility on the Polkadot network. So Polkadot is this ecosystem of blockchains currently ranked 10 by market cap, and now finally it supports EVM. Checking out the liquidity, this launched just 2 days ago. you guys, and there's already $137 million of liquidity in here. And so if I were to sort the total value liquidity locked by one-day change, Moonbeam Glimmer has been up 51% in the past day. Now, to get an idea of how high the Glimmer token may go, we can take a look at its associated Moonriver token, which launched on the Kusama framework. So Kusama is just like Polkadot, is considered the faster moving version, one just for higher risk taking and faster moving projects. And so here's a funny calculation. Kusama is worth $2 billion market cap. Polkadot is currently valued at $25 billion. So it's almost like a 10x factor to get to the production version that is Polkadot. And so currently Moonriver is at $375 million valuation. The Glimmer token already at $765 million valuation, so that's about a 2x factor now. If its complete market potential were to be reached, maybe it could 5x from here. Alright, our third token of interest here is going to be the Near protocol. And the reason that the Near coin is interesting is because ever since about 2 months ago, its total volume liquidity has just been rising and it's been steadily going up, more or less. And so Near protocol supports the Aurora EVM Ethereum virtual machine, which on top of it is being built decentralized exchanges such as Rev Finance or Trisolaris. And from the graphs, you can see that really just starting this year, these decentralized exchanges have started going into full production mode with lots of liquidity starting to pour in. And so I don't know why they split up the Near and Aurora protocols here, but if I were to add these together, it's about $900 million of liquidity pouring into these ecosystems for Near networks. Just recently, Near protocol also raised $150 million from major crypto investment firms. Who's their main investor? Three Arrows Capital, which just happens, by the way, to be this major force behind Tether and market making. In the Tether papers, they reported that Tether had sent Three Arrows at least $675 million in Tethers. Three Arrows has received a minimum of 7.3% of all USDT in the funds and companies brackets and describes itself as a crypto hedge that funds risk-adjusted returns. So Three Arrows, we've got this market maker liquidity hedge fund coming into the Near protocol, and I don't think they're going to lose money on this one, you guys. They're going to make sure it succeeds, okay? And if they don't, they're going to print some more tethers to ensure that. Now, here's the other funny thing. If I go into the DEXs and I sort by total volume liquidity, I can check what the top decentralized exchanges are. Osmosis here showed up. Coming into Osmosis, you can see this massive up-ramp of liquidity flowing rapidly into the Osmosis ecosystem. What is Osmosis? It supports the Atom Cosmos ecosystem. Atom Cosmos. So coming in here, $1.3 billion of liquidity with trading volume that just continues going up. So this ecosystem really thriving quite a bit here. And what's the top trading pairs? Atom, Osmo, UST Osmo, Luna. So Atom, which is really the native token powering the Cosmos blockchain, is what we're talking about here. And Atom is also involved in the Kronos blockchain as well. We've mentioned Kronos before on this channel created by Crypto.com. And so we can see Kronos is also becoming this thriving ecosystem starting just in November of last year, currently with almost $2 billion of liquidity in here, mostly supported by like VVS Finance, Tectonic, MM Finance, Chronoswap, and Beefy Finance for their decentralized exchanges. And so if you're to come into VVS Finance, check their top token pairs, you'll see a lot of trading pairs here with Crow, which is the native token for the Kronos blockchain, but also this one, Crow Atom, because Kronos blockchain is essentially also built on top of the Atom ecosystem. So Atom is this necessary component for connecting it to the rest of the ecosystem of blockchains that supports the Cosmos network. And then for the fifth coin, it's going to be a non-coin, you guys, because I don't really recommend this one. We'll have to see how it goes, but the honors go to Cardano, up 9% today, up 33% for the week. And that's because Cardano has announced finally that they'll be launching a decentralized exchange, a DEX, for their smart contracts, which should have launched months ago. So this is going to be Sunday Swap, planned to launch January 20th, this Thursday. But the thing is, it remains to be seen how this launch is going to go. Sunday Swap did issue a warning saying that there's going to be a lot of initial congestion and that orders may take days to process. Imagine putting in a swap and it takes a few days for it to come in. You won't even know if the price is any good anymore after that. They expect this backlog to last during the first days of the protocol. And that's because if you'll remember back in September of last year, their smart contracts faced major scalability issues based on their EU TXO based protocol design, which essentially could just process like one transaction at a time or something, like it wasn't parallelized. So maybe they got that resolved. To their credit, Sunday Swap does know that they're confident in being able to meet the real market demand once initial congestion burns off, and they're excited to launch this protocol soon. We'll see how that goes. Fingers crossed for them. If they launch, it's going to be nice opportunities for all of us.